Michael McCarthy. He's Chief Market Strategist at CMC Markets, and he's in Sydney. Thanks, Michael, thank you for joining us. Well, you know, 60 million barrels here being released over the course of, what, a month or thereabouts. So do you think it was a bit of an overreaction in terms of the amount we saw the oil price fall?
Well, I think there's a psychological aspect to it as well as a numerical one. But to put it in perspective, average oil consumption per day around the globe is around 86 million barrels, so it's not a huge amount. But at the same time, Libyan oil production on a daily basis was about 1.3 million barrels. So it more than replaces the disruption to output we've seen because of the Libyan political crisis. I think, though, that this is only the third time in 37 years we've seen a move like that. It certainly has an impact and is nowhere near the capacity of these reserves. There's a possibility that should oil prices remain too firm, that we could see further releases.
Yeah, and how much of this is political?
Well, I think that part of this is a reaction to the recent OPEC discord. There was certainly the Saudis pushing for further oil production, and that was shot down by a number of countries who are considered to be hostile to Western economic interests. And so to some aspect there is a political component to this move.
Yeah, I mean, you're referring to, of course, Saudi Arabia being in one camp and then the likes of Iran and Venezuela being in the other. So is this a way of actually, well, extending, or should I say, dividing them further?
I'm not sure about that. I guess it's about illustrating the consequences of not playing ball on a global oil supply basis. I think the Saudis are very aware that if oil prices remain very elevated for long periods of time, that we start to move into energy replacement cycles, and that's something all oil producers would like to avoid. But yes, it does put pressure on those hostile elements within OPEC to come to the party, as it were, and play ball with those major consumers of oil.
Of course, traditionally, Brent crude used to trade at a slight discount to WTI there. That's completely reversed now, and we've seen Brent crude vastly more expensive. Is this gap likely to widen further looking ahead?
Well, we've pulled back from the record highs just above $22 a barrel in difference between Brent and West Texas, down to around $17 at the moment. It's while there are further concerns about supply disruption, mainly out of the Middle East, that I think we will see a premium for Brent. However, I would expect that that will work through. And, of course, there's always the possibility of diverting supplies from other markets to Europe should this differential be sustained.
Do we have any flow on, you know, with the price of oil onto some of the other commodities in your world?
Yes, in terms of the laws of unintended consequences, one of the effects here is because there's been such a rise in commodity trading and investment vehicles generally, and because some of those investment vehicles reach across a broad spectrum of commodities, when we see selling in oil, that often leads to further pressure on other commodity classes, particularly the metals, but other energy products, and sometimes agricultural products, as that index selling starts to hit the market. So if we see further sustained pressure on oil prices, then I suspect that that will also flow across the commodities complex.
Right, well, just to get your views as to where we are in terms of these commodities prices, and we're talking about the whole gamut of them, are we pausing right now after the recent falls, or do you actually see further drops as we do get perhaps a slowdown in world growth?
Well, analysts differ on what's causing this moderation in commodity prices, and across the complex we've seen falls of more than 10% over the last couple of months. Now, in the main, they're pointing to a moderation of global growth expectations. While we still see the globe growing as a whole, those numbers have been revised downward, and that has meant that demand numbers for commodities have been brought down. If the data that we're seeing coming through, particularly from China and the US, shows that that recovery is still sustained, that it's still going on, I think we may have found a base. However, if we do get any shocks, anything from left field that knocks those global growth expectations further, we could see oil down to the mid-80s quite quickly.
Thanks a lot for that, Michael McCarthy there, joining us from CMC there in Sydney.